Reading the news has been quite depressing, to say the least, since the beginning of the year. We've seen lots of political tension in Egypt and Libya. Some sovereign debt in Europe has been downgraded. And of course, we all remember the natural catastrophe in Japan. Some might think that this would impact quite negatively the financial markets, but has it really? This is what I'm going to discuss today on this latest video blog. Hello everyone, my name is Charles de Marignac. I'm in charge of the Pan-European Fund here at SW Mitchell Capital. First, let's look at the VIX index that measures the volatility in the markets. When things started to go wrong in Libya, the index was standing at about 18. That was at the beginning of March. Then, the index picked up very quickly to just below 30 in less than 2 weeks. But we've seen that probably as quickly as it went up, the index came back all the way down to 15. Likewise, when we read in the newspaper that the Portugal sovereign debt was being downgraded, the markets did not really react to that news. Thirdly, with the earthquake in Japan, we first felt lots of nervousness in the markets. It almost felt like people were looking for some stocks or some companies being exposed to the country in order to play on the negative side. Stocks like LVMH that we hold in our portfolio went down by about 10% in about 2 weeks. Then people started to analyze these stories, and in the case of LVMH, sort of realized that the company actually only makes about 10% of its sales in Japan, and that actually these sales are structurally declining. The reaction of the stock was fairly direct, and the stock went all the way back to previous level to now trade at about 110 euros. In conclusion, despite what we've seen in the markets and in the news, the financial indexes have been fairly flat for the year. We feel very happy with our investment, and we remain very confident in what we do. As always, by picking up the best-in-breed companies, we feel that we don't have to react to short-term turbulences in the markets. We remain very confident about the outlook and the future for our portfolios. Thank you.